Our next guest says the 17% drop in home sales last month was more of an adjustment rather than a correction, but there's still downside risks facing the market. For more, we're joined by Adrienne Warren, senior economist at Scotiabank. She joins us from the TSX. An adjustment versus a correction, tell us the difference between those two words.
Well, I think it's the extent of the slowdown we're looking at. I think you would clearly classify what happened in the U.S. market as a correction, and a fairly severe correction. Here, again, I would say more of an adjustment, maybe kind of a mild correction, a little bit more severe what we're seeing currently in Vancouver. But again, we're looking at price declines potentially maybe 10% or so in a market like Vancouver. We're already over halfway there, but elsewhere nationally, single-digit declines. And given how much prices have gone up in recent years, I'd certainly say that was a mild correction or adjustment in the market.
What is the correlation between the performance of prices and the actual activity, the volume of home sales? Is there a typical lag that we should expect to see?
I think, yes, you would normally see a lag between the demand for housing and home prices, although supply also plays a very important equation. For instance, in the U.S., the excess supply foreclosures was one of the big factors pushing down prices. We don't have that particular situation here in Canada. What we're seeing in Canada is more of a slowing in sales. Again, we've seen that more dramatically in Vancouver, but more or less we're seeing that in markets across the country. Typically, after we've seen some slowdown, you would expect some softness in prices. Essentially, it takes a little bit of time for buyers and sellers to adjust their expectations. I would say buyers are quick to adjust their expectations. If they're out there looking for homes, they're quick to see that the market has softened, the bidding wars have cooled off, they're looking for some deals. Sellers tend to be a little bit more reluctant to cut their prices, adjust their expectations, and in the case of Canada, in some cases, we're actually seeing sellers take those listings off because they're not willing to accept such a deep discount. But more or less, we've gone to what in recent years has essentially been a very strong seller's market to essentially a balanced market in most areas, and in some areas such as Vancouver, maybe Toronto in the condo market, we're looking at buyer's conditions. And again, I think that could spill over to some other areas, again in Toronto, potentially the single detached market, which also seems fairly frothy at the moment.
You talked about supply, in particular how it related to the U.S. The supply issue here, of course, individuals, the existing stock of homes is one thing. It's the new product. Put into context what's going on in terms of new product coming into the market, whether it's single family or the condo markets. I think I saw yesterday 153 cranes operating in Toronto right now, all of those condo related.
Yeah, well, again, the new construction's another area that would tend to lag what's happening in the resale market. It takes time for the resale market to cool off, for prices to cool off, until builders say, well, this isn't the time to build, I'm going to slow down. We are starting to see that. We were looking at housing starts nationally about 220,000 earlier in the year. Now we've moved down to about 200,000 at an annual rate. Our expectation by potentially mid this year we'll be back to something that's more of a normal level of about 180,000 units being constructed. A lot of that slowing being in the multiples in the condo market. As you said, certainly Toronto is one of the hotter markets for construction, but again, we're seeing early signs of a slowdown. We'll probably see a little bit more of that over the next year. Certainly we've seen a slowdown in demand from investors looking for new condos just because the returns aren't there the way that they were a couple of years ago. First-time buyers may be finding it a little bit more difficult to get into the market with mortgage rule changes and the like. So again, I think that's an area that has potentially more risk. There's a bit of a lag there. We will see more supply coming on the market in the new home market, particularly the condo market in Toronto, that again we think we're already looking at a cooling off in prices. I think potentially you've got some downward pressure on prices over the next couple of years.
You talked about investors. Tell us a little bit about the makeup of demand in Canada, demographics, new home formations, those kinds of things that ultimately drive the need for new housing beyond the investment community or the investors or offshore investors.
Yeah, of course, it's always tough to get a handle on the investment numbers. We do have a better handle in terms of, as you say, sort of household formation. So the number of new households that are created every year. This could be an immigrant moving into the country, a student moving out of the family home on their own, essentially looking for a residential unit. Either they're buying or they're renting, but they need that new unit. Typically in Canada, we're looking at something that would support probably 180,000, 185,000 new units that need to be built, again, whether they're new homes or rental units. To just just to essentially keep pace with the growing population. The last few years we've been seeing something a little bit above that. However, we are beginning to slow down towards something that's a little bit more sustainable in the long run. Some markets we've seen more building here in Toronto. Say you could probably sustain about 40,000 new units a year. Again, we're seeing something more about the 50,000 in recent years, but it looks like we're slowing down to that pace. A lot of importance comes from first-time buyers that move a lot of the market. It's really toughest for them right now because of the tighter mortgage regulations and the high home prices. I think when they are coming into the market, they'll be looking either at the rental market, that's likely to stay very strong, or the condo market, that's still an affordable price point as opposed to the detached homes.
Adrienne, given the relatively modest declines that we've seen, or the way the correction is unfolding, is there a risk that it could accelerate? Is the risk still to the downside that perhaps the declines that we're seeing in activity and the prices, is the risk that it could accelerate and get much worse?
Well, I'm not sure at this point we're saying much worse, but definitely I think, as you say, the downside risk is greater than the odds that the market will pick up at this point. Again, we've got some markets that are in buyer's territory, such as Vancouver. Essentially, you're looking at sales in that market that are essentially at decade lows, while the number of listings out there, the supply, is essentially fairly normal. So that's a market where I'd expect to see further downward pressure on prices. Again, in Toronto, both in the condo market and probably in the single detached home market, that's, again, prices are getting into that unaffordable range for a lot of buyers. So yes, I see further downward risk there in prices, and broader when we're looking not just beyond the home sales and prices, but all of the spin-offs. So softer home prices mean fewer people are going to be undertaking renovations in their home. They're not buying new homes. They're not buying as many new appliances and furniture for those homes. Certainly not as many construction workers being hired. So there are broader ramifications for even a leveling off in housing activity over the next few years that takes away a sort of a significant drag that's been helping the economy over the last few years.
Adrienne, I don't know if you can answer this question in about 20 seconds, but we were commenting yesterday that the CREA numbers for December were non-seasonally adjusted, comparing December of one year to December of the previous year. Why would you need to seasonally adjust anyway a comparison of equal months?
Usually we wouldn't if we're looking a year ago, and as you said, there's been a drop from a year ago of about 17%. But if we look at the month-to-month trend in home sales, there is a large amount of seasonality. Not a lot of people buying in the winter months. There we're seeing a much smaller drop, or more or less a leveling out over the last couple of months as we head into the slow period of house sales.
Okay, Adrienne, thank you very much for joining us this morning.
Okay, my pleasure.
Adrienne Warren, Senior Economist, Scotiabank. She joined us from the TSX.